Hello. Thank you for joining us for this lightning session with Master Trust Provider Cushon. Now, if the idea of investing DC pensions in private markets doesn't give you the warm fuzzies, I promise it will after watching this session with Danny Meehan, Cushon's head of workplace savings. There are a couple of polls in this session, so please go into the poll tab and give us your answers. And now, let's welcome Danny.
Hi, everyone. Thank you very much for that warm intro, Rachel. I'll do my best to give everybody the warm fuzzies. I'm head of workplace savings at Master Trust Provider Cushon. The key things I really want to speak to you about today are obviously overarching theme of private markets with a strong climate stance. I'll cover off the 3 reasons why DC pension schemes haven't traditionally adopted private markets investments, and the reasons for those are definitely falling away. We'll touch upon some compromises that need to be made to make it a success, and we'll talk about 3 reasons why. Of those 3 reasons, we'll have a strong focus on the impact opportunities that private markets can present. But first of all, on the next slide, we'll talk about our kind of overarching approach, Cushon's overarching approach to member engagement. So we look at it through 3 lenses, what we call hassle, hearts, and wallets. So if we start with hassle, we kind of take the view that making it easier for members, eliminating friction through easy accessibility through an app, carefully crafted user experience and choice architecture can create a significant boost to member engagement. It's not just about having an app, it's much wider than that, but if we make it easy for people, that's a really great place to start. If we then jump across to what we call wallets, we leverage mass personalization that can be enabled to deliver our messaging to speak to people as an individual. It really does help, communicate with people as individuals and help them make the best of their own situation. What we're interested in today, though, is what we're calling the hearts. We want to create a clear link between our members, the things they care about, and their investments. And we want to be able to use this in a way that can enable members to draw a deeper connection with their pension, and also use it to leverage greater engagement so they can make better decisions for themselves. So if we just jump to the next slide, we want to kind of address first and foremost some of the reasons why private markets investments have been absent from DC schemes. So there's kind of 3 historical challenges. We would argue that some of these are myths. I guess starting with the myth, there's been an overarching view that you can't daily price. You can daily price. Within private markets, clearly you can't have a valuation on a daily basis, but if you have a fair value assessment, if you've got a clear methodology for daily pricing, and you can get your trustees comfortable with it, it's a bit of a non-argument. Charges comes up an awful lot. Private markets is too expensive. I think our strong answer to that is that's not the case. You have to work harder. We've worked really hard negotiating with our investment managers, and for those that were charging things like performance fees, we just walked away from the conversation. We're not engaging where there are performance fees. We've got our pricing to a really good place. I can't tell you the private markets portfolio pricing, but because that's commercially sensitive, but we've got the overall default investment strategy price at 15 basis points as a TER. You can get private markets at a good price. You can negotiate, your own deal and do it really well, or you can come to it by a cushion. We don't mind which one you do. And finally, liquidity. Obviously, with private markets, it's a long-term investment. You have to accept that the money will be locked away for a period of time. We've got a 3-year locking period for us, but we've got a wall of money coming towards us as a master trust provider, both in terms of ongoing contributions and new clients, and for the indefinite future. Any DC scheme has liquidity in its cash flows to offset some of the constraints that private markets can present. You have to be a little bit looser around your strategic asset allocation constraints. You can't simply sell down your private markets assets. But if private markets, say if listed markets values collapse and private markets stay level, you'll just have to kind of stay overweight in the private markets until your strong cash flows come back and compensate to bring you back into your strategic asset allocation boundaries. So let's focus on the next slide, which tells us about what private markets can offer DC. So what can private markets offer DC? Well, three main things. Greater potential returns for members over the long term when compared to public markets. You know, in this example here, you can see that listed markets are thinning more generally. This is a US stock market example, which shows a reduction of around 40% in the number of companies that are listed on public markets since the peak of 1996. And if we were to kind of move forward and look into some specific examples, you can take the example of Uber, which listed at some point in 2018. When it listed, its valuation was so large, it would have registered at company number 280 on the Fortune 500 list. That's an incredible amount of value that's accrued before the company is listed on the stock market. And I haven't checked today's share price, perhaps I should have done, but when I last checked it last week, the company hadn't really significantly grown in value then. And in fact, I think its market capitalization has shrunk a little bit. If we to like a look at another example, a company called Wise, formerly known as TransferWise, a great British IPO success story. They delayed their move to public markets through a secondary sale, which allowed them to stay private. And during that period, their valuation doubled. Again, you know, further evidence of values increasing in the private space. So simply, if you want your members to benefit from increases in the value of you know, their underlying investments, you do need an access to a private markets portfolio. And just one final example, it's not quite, it's more of a topical example to bring to life current events. Many of you will be aware of of Morrisons and the bidding war that's been going on between private equity houses. Morrisons will be taken off the stock market, and we might see more evidence of that as well happening in due course, which kind of underlines the need for, if you're looking at kind of ESG investing, you need to take great care when picking your private markets investments, because many companies will be looking to go private for the opposite reasons that you probably want as a fiduciary, i.e. they want less red tape as they see it rather than more. So the kind of second benefit we all need to be aware of is that improved diversification. Private markets offer better risk-adjusted returns for members. They've got different return drivers to public markets, different sources of return. So take a couple of examples from Cushon's private markets allocation. You know, two of the things we're investing in are forestry and microfinance. You know, they're completely uncorrelated with public markets, or very loosely correlated at best. So there are real diversification benefits there. And then the kind of theme that we're leading into in this session is it enables a differentiated approach to impact, and we can use this to kind of drive member engagement. If you couple some of the stories that can be kind of shared with private markets investments with best-in-class technology and user experience, we have real opportunity to engage members in a way that was previously unimaginable. So you can tell them about the solar farm that they're invested in. You can tell them about the forest they're invested in. You can even take them to the forest they're invested in if you wanted to get that far. Let them take a tour. Let's face it, most members are not engaging with traditional pension messaging around benefits they might get 30 years into the future. But we can look to engage them about the things they're investing in today and the difference that they're making today as well. You know, this approach is paying dividends. We've got a kind of 85% engagement rate at the moment, which we're looking to build upon. So it definitely is a really important tool that you can have available to engage your members more broadly. Just spend a brief moment looking at how, on the next slide, how Cushon has Cushon's net zero 2 investment strategy. So we've got 75% of the kind of growth phase in climate aware and UN sustainable development goal aligned global equities. That includes emerging markets equities as well. And we deliver that through our partner Macquarie. using a custom developed index that we've created in conjunction with Solactive. We've got a corporate bond portfolio, active bonds, and that's split between a climate bond mandate and a social impact mandate. And that's with Wellington and Lombard ODA. And then we have the 15% private markets mandate, and that's overall managed by our multi-manager partner Schroders, with access to a number of different underlying fund managers. And just to kind of call out one example, I mentioned forestry, I think in the previous slide, Gresham House are managing our forestry portfolio. If we are to move on to the next slide, just to give some examples of some of the things that we're investing in. We're investing in wind farms, we're investing in solar farms, battery tech, green hydrogen, social housing, rethermal installation of social housing. We're looking at microfinance, things like women's sewing collectives in sub-Saharan Africa, forestry, which is one that's close to my heart, and I'll touch upon that shortly. And further down the line, we'll be looking to invest in carbon capture and soil restoration. So, a really diverse array of investments that we believe will give strong returns, particularly as we transition to a lower carbon economy, but also a great opportunity for us to engage more with our members. And on the next slide, we talk about one of our favorite examples. So if we just get this video played, yeah, brilliant. So what have eagle hatchlings got to do with workplace pensions? Well, you probably think, well, not a lot. But if you picture the scene, it's the weekend, you're at a barbecue with some friends, the topic of conversation turns to pensions. You pull out your smartphone, you go into your pension app, and you're able to show a live webcam feed of some golden eagle chicks hatching, the first time since the reintroduced species have been hatched in the forestry segment of your pension private markets portfolio. The eagle-eyed amongst you will know that this video isn't a golden eagle, it's of a bald eagle. It is just the best video I could get to kind of underline my point. But we're quite serious about this. It might not be golden eagles. Obviously, it's a great example, but we are, in fact, hopefully next week, I'm going to be visiting the forestry that we're investing in as part of our private markets portfolio. And we'll be definitely looking to reintroduce native species there. This presents a really strong opportunity for us to kind of use our technology and to be able to kind of webcam interesting events that can happen there that are worthy of communicating to our members. So, watch this space is all I would say. If we are then to move on to the next slide, we've got an example. It's not a very high impact example. I've kind of deliberately kept it this way because I want to keep my job. But this is a kind of an early draft version we've been looking at internally about how we can communicate to members. So if we just click and we can see the video playing, this is my iPhone. I've got the kind of demo account that I've set up for the PLSA. You can see how we're looking to surface some of this information. We have a projects dashboard, some fairly static content here. It's more for illustrative purposes at the moment, but you can see here, these are examples of some of the carbon credit projects we've been funding as part of our carbon offsetting program, just to kind of test the concepts. But you can see here, there's kind of scope to provide rich opportunities to, kind of share some of the things we're developing with our members. It could be webcams, as I've described. It could be blog content. It could even be direct Q&A sessions with, the Women's Sewing Collective in Sub-Saharan Africa, which our microfinancing loan has helped to fund. There are a wide range of possibilities there, and we're working very hard with our investment partners to bring these stories to life to help them, in terms of communicating more with our members. So just to wrap up on the next slide, just some key takeaways. This is a bit of a whistle-stop tour. We can go much deeper into a lot of the things that I've discussed. In our view, if you combine private markets and climate and social impact, you've got a really powerful recipe there. If you add to that tech-driven interactive content, some of which I've outlined, we really believe, this increases the perception of the value of the member's pension. We're not just talking about fund values and income levels 30 years hence. We're talking about real impacts that members can have now indirectly through their pension. and some of the stories that we can get off the back of it, driving engagement and kind of creating a virtuous circle. The more engaged our members are, they'll be doing things like nominating beneficiaries, maybe taking better decisions when it comes to how much they're contributing. We think this will lead to better outcomes. Well, thank you very much for your time today. I will hand back over to Rachel, who's going to close the session.
Thank you for that, Danny. I'm sure everyone watching will agree that we've not heard this before. You can click on Danny's profile and send him a message if you'd like to talk to him about this. And you may also be interested in our session from Wednesday on the benefits of private credit for small and mid-sized schemes. Like this session, it's available in the conference platform until the 9th of November. Please take a moment and rate this session before you go. Thank you.